Credit Suisse is one of the world's leading financial services companies. They entered into the green bond market as of May 2020 when they approved their first self-priced green bond for 500 million euros. However, we believe that CS can go even further, not only to improve society, but to benefit its own business by expanding its use of ESG fixed income financial instruments. Green bonds are a great first step in this process, but CS and society as a whole would benefit further if the bank skipped directly to issuing sustainability bonds, a financial tool that is similar to green bonds but also explicitly considers social impacts. Sustainability bonds are a rather new financial instrument, and as such they have not seen much use so far. For that reason, we will use green bonds to contextualize their growth. Green bonds are issued with a specific intent to promote sustainability around the world, and the best place to look for inspiration with green bonds is the World Bank. The World Bank is the primary development financial institution in the world that issued the first green bond back in 2008. Since then, World Bank green bonds have been used to finance projects like the Morocco Clean and Efficient Energy Project, which will support almost 30 energy efficiency sub-projects in Moroccan hospitals and healthcare centers.
To get more insight on the development of green bonds as a financial instrument, we talked to Scott Cantor, a senior financial officer at the World Bank in the capital markets and investment part of the Treasury. I would definitely make sure that you include this evolution of sustainability bonds as a broader way of thinking about not just climate and not just social, but to think about how to integrate the two.
The global bond market was comprised of $5.26 trillion in assets, of which only around 5% came from green bonds. This leaves a lot of room for growth in the market.
Scott Cantor stated that the way we think about the green bond market and what's next is that there are two things that are happening in parallel. First, the market continues to grow, and issuers continue to be attracted to issuing green bonds as they start to becoming more transparent about their climate action and their climate activities. Second, there's a larger trend that is more important than the growth of the green bond. This trend is the influence that the green bond market has on sustainable finance and how capital markets and investors and issuers are thinking about climate change and sustainability. We also talked to Natalie Johnson, a senior environment specialist at the World Bank.
The idea of this is that we use the bond market, we transfer the risk to the bondholders, and we have a new vehicle to raise money for conservation. It's not philanthropic, it's not public sector. It's basically private sector financing conservation because they get an upside. Now,
so knowing this, where should Credit Suisse go from here? We believe Credit Suisse has three options. They can stick to the status quo and continue with a limited green bond program, expand their green bond business, or skip to establishing and expanding a sustainability bond business. Credit Suisse needs to expand its fixed income ESG business so that they do not lose out financially. One-year green bond indices have higher returns than conventional bond indices, though longer time periods are little less certain. Both green and sustainability bonds allow investors to diversify assets and hedge against risk. Credit Suisse can use these financial instruments to attract new investors who prioritize environmental impact, and sustainability bonds have the added improvement of attracting investors who prioritize social impact.
Expanded green and sustainability bond businesses will also help CS enhance its reputation and promote the UN Sustainable Development Goals. Big names like Goldman and Morgan Stanley are already benefiting from their ESG expansions. Comparatively, CS is behind. The sustainability bond space is new and growing. If CS skips past focusing on green bonds and moves directly to sustainability bonds, the firm is poised to set itself up as a leader in this growing market. Green and sustainability bonds are also good for society as a whole. They finance projects that improve environmental conditions. However, sustainability bonds are more advantageous for local communities than green bonds because social impacts are taken into account. By directly incorporating social impacts into analysis, CS can try to ensure that they are not creating or perpetuating equity issues.
Going back to our conversation with Scott from the World Bank, he elaborated that, quote, the World Bank likes to think of green bonds as an introduction or gateway for companies that maybe will issue one or two green bonds and then see the merit in them becoming more transparent in what they're doing and what their climate impact is. They'll think more holistically about sustainability and maybe move beyond green bonds and start thinking about how they can integrate sustainability in all their activities. As Credit Suisse expands into ESG investing in fixed income markets, we recommend that Credit Suisse work on sustainability bonds as opposed to green bonds. Social impacts need to be incorporated into both projects and financial analysis, and sustainability bonds are the way to accomplish this. Credit Suisse can position itself to do both well financially and make an impact by growing its sustainability bond business before its competitors.
if you tailor your portfolio towards companies that are guaranteeing certain standards of what we call sustainability, either, environmental sustainability or social, some combine all of them, that you, by and large, across the board, will do better.
Credit Suisse's focus should be on sustainability bond issuance, not underwriting. Expanding issuance will allow Credit Suisse to become pioneers in this market and allow the firm to tailor financial instruments around investor demands. Credit Suisse can also gain a competitive advantage by issuing in the developed world, where the World Bank does not currently operate. All in all, the benefits of issuing sustainability bonds for Credit Suisse are too large to be ignored. We urge the firm to take action.